Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I'm your host, Juan Vargas. Today on the show, we have Craig Haskell. Craig has over 35 years of experience syndicating value-add real estate deals and has owned and managed over 7,200 units and 2.8 million square feet of commercial real estate space and provided advisory services on over $2 billion in asset value. He's the author of The Inside Game to Real Estate Value Investing, How to Take an Apartment Building from Money Pit to Moneymaker, Secrets of Successful Apartment Buildings, and a Guide to Creating Successful Apartment Advertisements. In addition, he's the creator of the Wealthy Syndicator and Value Hound Academy, a premier platform for real estate professionals and investors who want to become top real estate syndicators. Craig Haskell, it's a pleasure to have you here.
Hey, Juan, thanks for having me on. I appreciate the offer to be on your show, and I look forward to giving lots of advice, lots of good tips that are actionable right now. And so I'm looking forward to this process. So let's get going.
Yeah, let's go ahead and get this thing going for sure. So Craig, before we get into the book of the interview, tell us, a little bit about your background. Tell us where you're calling us from as well. And then we'll kind of dive into today.
Well, today I'm calling you from Phoenix. My wife and I travel around the world, and right now we're in Phoenix. And basically that's kind of our home spot. I grew up in Southern California back in until I was like 30 years old almost. I went to school in a little town called Rialto, California, which is just outside Los Angeles, probably 90 miles east. I graduated from high school there, went to Long Beach State. I majored in marketing and finance. And while I was at Long Beach State, I really got hooked on real estate. Like a lot of you guys are listening to this saying, real estate, you kind of get stuck on it. I want to do all this stuff. Well, back then there was a guy by the name of Robert Allen, right? Robert Allen, nothing down. And Robert Allen was the guy that was all over the place. He was the guru. I don't like that name, but he was the guy that was speaking all over the place, and everybody had his book, best-selling book. Hey, we can buy properties, nothing down. And I thought, wow, that sounds pretty cool. I don't have any money. I'm a college kid. And I can make all this money and get rich, like he'd always say. And so I got into the business. I graduated at college in 82, and I got it into the business and started trying this out in Southern California. I'm from Southern California, obviously. So the market's pretty tight in Southern California. There's a lot going on, and it's hard to buy deals, nothing down, unless you're in some property that's just beat the heck, and there's no way you can make money on it. So I stumbled around for probably a year and a half, wanted to really make this happen, but it never did happen. I struggled. It was hard. I learned a lot. I mean, out there getting beat up a little bit, but I decided I really wanted to be in the game. I wanted to be in the real estate game, but I wanted to take it to the next level. I wanted to be more sophisticated. So I got in the commercial real estate business. I worked for a regional commercial real estate company in Southern California out of Newport Beach. It was called Norris, Beggs & Simpson, and I specialized in retail and office space. And during that time, I did a lot of lease deals where I'm putting together leases for my listings for my owners. Most of my owners were syndicators. I started to learn the syndication business from those clients. I since went on to start my own business in the mid-'80s, and it was a brokerage business and a management business. And some of my big clients were in Beverly Hills, the Century City area, that I was selling a lot of their properties and learning this business. I really learned how to do this business. I figured, you can buy properties with money. You don't need to buy no down deals. Just like these guys were raising lots of money, doing all these deals with other people's money. So I learned what they were doing. So I finally got my first deal in the mid-'80s. I went out and bought a house in Chino, California. If anybody from California knows where that is. I bought this little house close to the golf course, a 4-bedroom, 2-bath. I went out and raised the money from one partner. We bought the property, and we each made about $22,000 of profit. And I said, hey, this is pretty cool stuff. So I decided that I wanted to go bigger. So I looked at going bigger, and during that time in the late 80s, there was lots of real estate problems. Things were starting to crash, right? Back in 1986, we had a tax law that allowed investors, passive investors, doctors, attorneys that made lots of money, that allowed them to take 4-to-1 tax write-offs. So they got these huge tax write-offs. So Reagan put in this new tax law that actually got rid of all those tax losses. So all the properties that were really being built during the 80s, early 80s and late 80s, there's tons of construction going on, and it was being driven by all these guys buying these tax deals where they were all basically negative cash flow because they want that negative cash flow to take and use it against their tax return. So when Reagan changed the law, all of a sudden now these deals don't make any sense. They got a cash flow. So they didn't cash flow. What happens is the savings and loans back then were starting to take these things back like crazy all over the country. A big place was in Texas, right? That was a big, big place. They're taking these back. These savings and loans got overwhelmed. So what did they do? The government stepped in and created something called the RTC. And the RTC was put together to dispose of all these troubled assets and clean up these savings and loans, which they did. So I saw, wow, this is a great opportunity for me to get in the marketplace and start buying some of these properties at low prices. And so I looked at, I know, Juan, you're out in Houston. I looked at Houston back in, the late 80s.
Mm-hmm.
And deals were selling for $6,000 a unit. And when you go out to Houston, they go big, man. They're Texans. They go big. So these things are like 12 and 1,500 unit size, all beautiful brick buildings. Yeah. And back then, dude, you would see fences all the way around these buildings. It was like a ghost town, tumbleweeds going through it was scary. Blocks and blocks of these buildings just basically fenced off. So I thought about that. I thought, but the problem was it was, 3.5 hour, 3 hour, 45-minute flight from Southern California to Houston. So I thought, it's just too far. So I ended up looking at another market that got beat up pretty good, which is Phoenix. And I looked at that and I said, hey, that's an hour flight on plane. It's a 5.5 hour drive. And I said, I'm going to check into this market. So I'd never really been to Phoenix. It's been a while since I've been there. And so I looked at it and said, this is a great little town. It's up and coming, high growth area. And I said, I'm going to start setting up shop here. So I did. And I started to research the market. I probably spent, I would say, 9 months to a year just really researching the market. Because it's a jungle, right? I got to learn about the jungle, what I'm getting myself into. And then I started putting together my deals. I had a bunch of clients that I'm working with in my business. So we started to accumulate money. We started buying properties, bought about 1,500 units. We made about 6 times our money in the 90s. And from then I went on to, during that time I was doing consulting with some of the Wall Street guys and some of the family companies around the country. I was helping them with their portfolios. And I got back in the game in the early 2000s, and we started doing some more deals. And we got bigger and sold those off. And, that was in the mid to late 2000, 2008, 9. We started selling stuff off. 10, actually more in 10. And we did pretty good. We had some problems, some of the properties, because we got hit by the downturn, with a big, huge downturn, but we still did okay. And I got rid of the properties, and I've been doing the Value Hound Academy, which I'm a part of. I set up and founder of, and we've been helping other syndicators, like a lot of your listeners, help them to get their business started. We've done that for a number of years, probably been around 10 years doing that. And so I changed my entire life. I was all about simplifying my life. My son died. Probably it's been about 6 years ago.
Mm-hmm.
I got cancer. We travel a lot, so we were having to be in Costa Rica, and I had some issues, and so we went to the hospital there, and I found out I had a tumor in my brain, and so I came back to Phoenix, and had it taken out, and they found out it came from somewhere else, came from my lung. So I've been dealing with that. Thank God we got good drugs out there right now, so I'm still kicking, and there's some other treatments I can go through that will, that there's been so much development. So I changed my life. It's all about helping other people and making a difference in the world with my time left. So that's kind of my story.
Well, yeah, that's a lot of value just in your story and your background. You definitely have been through a lot.
Yeah.
You definitely have a lot of experience, and you've been through a lot of life challenging situations as well. And so the key through all that, I think, is just to keep pushing. And at the end of the day, it's about helping others and, providing as much value as we can to others. And, that's what we're trying to do here with today's show. And, I do it. I try to do it through having good great guests like yourself providing that value. So thank you so much for sharing that, Craig. So so you talked about, a couple of different markets. You talked about Houston, you talked about Phoenix, and you were opportunistic. You went in there and you found, hey, you know what, this is a good time for me to get in here and create some value, find value and create it. And so, even before all that, let's talk about how someone out there listening, someone that hasn't done a deal per se, or even if you have done a couple of deals, but you want to grow larger, right? You've done a couple of smaller deals. So let's talk about the very beginning. How can someone get started in this business, in the commercial real estate business?
That's a great question. Just like any business, Juan, this is a business, right? So it takes time. There's a lot of people out there talking about, hey, you can get rich in 3 weeks, right? Well, it doesn't work like that in any business you work in. But with the right system set out, with the right plan and the right energy and the right mindset, you can do anything you want in life. I'm just telling you. So for the new syndicators getting started, I have an 8-step system. I call the 8-step high flyer system. I got a new book coming out. So it's really something I've been using forever. The first thing you got to do, I'm going to give you the big picture, and then I'll drill down exactly things you need to start working on right now. But the bigger picture is, it's all about a strategy that we use called ready, aim, fire.
Mm-hmm.
Ready, aim, fire. If you think about it, there's people at different spectrums of that ready, aim, fire. There's people at the fire end that all they do is go out there and shoot anything that moves. They just start doing stuff. They don't know what they're doing. They don't know what they're aiming at. They don't have any clue. But on the other side, you got the people that are just getting ready and aiming, and they don't ever go forward because they're always waiting for that next thing to help them take that next step, and they never get to actually executing. So what we have is you have an 8-step system, a big system. The first thing you got to do, Juan, is you got to get ready. You got to get ready. You got to have the right mindset. You got to be 100% committed to what you're doing. If you're not 100% committed to what you're doing, then don't do it. There's a lot of people, I have an article I wrote on, are you interested or are you committed? Most people are interested. They want to do all this stuff and they get excited. And as time goes on, life gets a little inconvenient, things get a little tough, and they quit.
Mm-hmm.
They weren't committed. Right?
Yeah, I would add to that real quick, and it's kind of like this podcast. It's called Commit to Wealth. Commit is a big word. It's a big, strong word. There's no reason to be interested in anything, especially in this business. It's you're in 100%. That's committed. That's commitment. I would agree to that. So you have to be committed, Craig. That's what you're saying. You got to be committed, and then.
Yep. You got to be committed. And the second step is in getting ready is you got to have the right training.
Mm-hmm.
When you get in the guys, when you get in the commercial real estate business, whatever you're doing, we're talking about multifamily right now. It's a business. You got to understand it's a business. You got income, you got to generate. You got expenses, bills you got to pay. You got to market your property. You got to take care of tenants. You got to fix your property. You got debt. You got to service. It's a business. The better you are at running that business, the more value you're going to create. A lot of new syndicators get involved in this business and they think it's just an investment. They don't run it like a business. You got to run it like a business. So you got to get the train on how to run these types of business. How do you buy these properties and how do you run them? There's two sides to this equation. There's the deal side, where most people focus on, and there's the operational side. You need experience in both of those. You need to see the whole picture, right? And so you need to focus on getting that training. Another thing is step 3 is support. This is huge. Think about when you were a kid. You're just a young kid. You got your parents to give you this support. They still give you support today, but really they were there in the early days. You go to school. You got friends. You got teachers. You got counselors all supporting you. Get into college. You got friends and counselors. You get into your job, right? You got people that you work with that are supporting you in your job. Think about the Alcoholics Anonymous, right? The core reason that they're successful with their program is the support. So you need support. Now that support could be somebody from I call it a free board of directors, and I got that from a guy that I interviewed years ago, who's a billion-dollar syndicator, and that's his big thing is, you're going to have a free board of advisors, and those guys are people that are on your board that you can go to and you can ask them questions about, I got this problem. Can you help me out? It could be your spouse. It could be your brother. It could be a coach. It could be anything you want. If someone that's got in the business has experience, you can go to them. But you got to get that support. So that's a step 3. Any comments on that? Juan?
Yeah, no, and I agree with you 100% on that. Not having that support, especially as a newer guy, and even, doesn't really matter your experience level. Some of the older guys that have been doing this for a while, they still look up to other guys, that have more experience even than they do. And so having those type of people around you, whether it's, a good buddy that has experience or a coach, that's critical. That's very, very important to always be around people like that.
Absolutely. And it makes you better too.
It makes you better. So that was step 3. So step 4.
Yeah. Step 4. Now we've just gone through getting ready. You got to take these steps in order, right? You're ready. Now we got to take aim at a target. Now we got to put together step 4 as a plan. We got to create a plan. And that plan is built around solving a big problem in a big marketplace. That's the core of the plan. How are you going to make money for an investor? What's the process going to be? What are the steps, the 4, 5, 6 steps that you're going to go through to help them make money? But you got to solve a bigger problem. Investors are not excited about how you're going to fix the building up and raise rents and make money. They want to know a bigger problem. Think about some of the bigger problems in the marketplace. Affordability right now is a huge problem. Some of the biggest demographics going forward are millennials, seniors. They're retiring, baby boomers, and you got the Hispanics, which I did a little something about the Hispanics. So you have a big problem, right? So you got to come up with that plan on how you can do that. And then step 5 is you're going to come up with a process, right? What are the steps I'm going to take to execute my plan, right? So that when you start in step 6 to start executing, you already know the steps you're going to take. You're just go bang, 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 bang down the road until you get to your goal. But that's kind of the ready. We got to have a plan. We got to have a target we're going after. We have to have a process. Any thoughts on that part of aim?
No, just part of that is the education part. How are you supposed to aim if you're not educated enough on specific markets or specific properties? So no, and this is not just multifamily, guys. For anybody listening, our focus here on the show is more on multifamily, but we're thinking higher level here. This is any commercial real estate. So whether it's multifamily, self-storage, retail. You name it, whatever. It's pretty much the same kind of steps that you got to take, regardless. So that was step. What was it? Step 5, step 6.
Yeah, it was step 5. So that's you're right on there, Juan. Absolutely right on. And so now we're gonna now that we've gotten ready, we got our mindset right, we got our training right, we got the support, we got a plan in place, we got our steps, our process. Now it's time to execute. We don't start executing until we've got the ready and aim done. We got it done. Now it's time to execute. And all about executing is taking our business plan and going right down the steps and executing the process. Step 1, step 2, step 3, and keep doing it. And step 7, you'll find that it's about measuring that process, the progress of executing. You're going to have problems. Syndicators, let me tell you something. This is not a straight line. Any business is not a straight line. You're going to have issues, obstacles along the way. So you got to adjust your plan a little bit. Mm-hmm. I have something called the design opportunity, and the design opportunity is something I learned from my uncle, who's a big wood turner. So they get these big pieces of wood, they put it on a turntable, and they carve up this beautiful artwork. And I said, "Gosh, don't you have some things happen bad when you're doing this?" He says, "Yeah. All the time. I always have to find a workaround. I always have to figure out, I got this problem, how do I get around it?" And we call it a design opportunity. You're going to be in the same position. As you start to have problems, things start to pop up that you didn't expect, you got to figure a way around it. There's always a way around it. You got to figure that out. If you have your support team there, it will help you come up with that design opportunity, how to do that. So that's the 7th step. And the last one is goal. You got to have a goal, and the whole thing is getting to that goal. And so we got 7 steps to get to that goal, and all we got to do is follow those steps.
Okay, well, yeah, that's a very, very good outline of the 8 important steps that it takes, from beginning to end, basically. And I would say even after that, you have your goals, but it's really about executing the business plan that you had set forth, and continuing to find more opportunities. So Greg, we talked about these 8 steps, and this is more, I would say, part of the business plan is finding the opportunities. But in addition to finding opportunities, what's another big piece to putting a deal together? It's capital.
Yeah, putting the capital. So raising the capital. But let me just finish up, just give some action steps for your listeners.
Okay.
the first thing I want them to do is I want them to obviously get their mindset, training, and support right. That's getting ready. But you got to create a plan, right? You got to create a plan that focuses on the property you're gonna specialize in. Here we're talking about multifamily. You're going to talk about the market, and you're going to talk about your investment strategy. You need to really focus on that. How are you going to make money for investors is the core of your plan. Think about a lake, right? A lake out there. If you're going to go fishing, you got to know what lake you're going to fish in, right? You got to know that lake, and you got to know what kind of fish you're going to catch. The lake is the market. The fish is the property type. Then you can have a strategy. What's your strategy to do that? You're going to be different. You're going to know everything about that lake. You're going to know everything about that fish. You're going to know exactly what type of bait to bring, where to fish, what time of day, what kind of tackle to bring, what kind of bait. You're going to know everything about that so that you're going to be the expert, right? So when you put together your business plan, you're going to be the expert on your property type, your market, and your strategy to make money. And we talked about some of the strategies, some of the problems in the marketplace. Millennials are growing, the baby boomers, the Hispanics, and all that kind of good stuff. You're going to solve those problems with your 4 or 5 step secret step process, right? You're going to have a formula to do that. So that's what I want you guys to do, is start thinking about what's your PMI strategy, what's your property market and investment strategy going to be, and why is it unique? Why is it different than everybody else's? So that being said, let's talk about the money raising process. There really are 4 steps to the money raising process. Too many people, new syndicators, even experienced syndicators that have been doing this for a while, they think you got to have a deal first. They think, oh, I got to go tie up a deal, get it under contract, and then go out there and raise the money. Wrong. Unless you have a rich uncle or a rich dad or rich parents or somebody that's got a lot of money that's behind you, you can do that. But most of us don't have that, right? We don't have the money. So we got to go out there and raise it. If you tie up a deal and you got 2 weeks, let's say you're 30 days, it depends on the size of property. Let's just say you had 30 days. In 30 days, you got to have all your money raised, or you risk losing your earnest money deposit. It's too risky. So the right way to do it is to go and put together your business plan, your pitch book that outlines how you're going to make money for investors, your unique problem you're solving, and the opportunity for you to make money. You're going to put that in a little, 15-page pitch book, and you're going to go out and start talking to investors, and they're going to get excited. And, oh, yeah, I like this. This makes sense. And you tell the investors, this is one question you tell them. If I find a deal that matches our strategy, would you like me to bring it to you? And the ones that say, yes, I want you to bring that to me, they go on your list. You're going to build a database of yes investors, and they go on your database. You get the 10 to 15 of these guys built up. Then you go out and find a deal. Then you go get that deal, right? And then now you have this deal under contract. It might take you 3-4 months. Doesn't matter, whatever. You get it tied up. You're going to be staying in contact with these guys all during that 3 or 4 months. But once you do get that deal, you're able to go back to them and say, hey, Mr. Investor, I found the perfect deal. It took us a while to find it, but it's the perfect deal. It matches our investment strategy perfect. And we're going to load the truck on this thing. That's the process you need to take to raise money.
Yeah, I would agree, 100% on that. I think there's a lot of guys out there that they feel that if they have a deal, and to them in their eyes is good, and it could very well be, but after they have a deal, then the money will follow. And that's a common misconception out there.
Absolutely.
Among a lot of folks, and it gets thrown around a lot. You look at different, blog sites and, just forums and stuff like that, just find a deal and the money comes following. And that's, I would say that's far from the truth. And in some cases it could be true, but if you have some limited background, but related background, but in most cases, especially if you're newer, then that's not the case. You got to find and build those relationships beforehand, before it's needed, So yeah, that's a very good point that you brought up there.
Yeah, there's too many people. You'll hear these guys out teaching this stuff. Oh, you find a great deal, the money will be there. Not happening.
Yeah. So you find your investors first. You build those relationships. And
that's where you start, Juan. That's exactly. You start with the investors first, not the deal. Get them lined up first. It's easier. It's just more safe for you. It's the way to go.
Exactly. So you find your investors first. And so after that is the deal hunting. So how can someone find the deals, these days? And what are some good strategies that they can use to find those deals?
Well, I mean, there's all kinds of guys out there teaching how to go out and source deals, right? There's no secret to it. But the real catch to finding these great deals, because a lot of these guys are out there and they see deals and they think, oh, the property's overpriced. They're looking at the cap rate. So I want to talk a little bit about the difference between price and value, right? Price is, like Warren Buffett says, price is what you pay, but value is what you get. So you need to focus on, hey, in the marketplace, where's there value that people aren't seeing? That's the key, really, to being a successful value investor, being able to see value, right? Seeing value is everything. And they'll find a lot of properties out there that people just pass by. In fact, we had a raising money boot camp here, gosh, been 3 years ago now, out in Scottsdale. And one of the students came named Richard. He got me aside. We were out in the outside the conference area. We were sitting on a table, and he said, "Man, I can't find any." He's in Florida. I can't find any properties because the cap rates are just too low. I just can't find any deals. I'm making offers. I'm not getting anything accepted. I'm struggling here. And I said, well, you're looking at the wrong thing, Richard. You're a value buyer. You're a value hound. You're not looking for price. You're looking for value. Value is everything. So I sat down and we put together on a piece of paper on the table, and I started outlining the income, the expenses, and coming up with a cap rate based on the real numbers. And then I started to show them that value is what this thing could really be. Value is the opportunity to create value. If a guy's owned the property for a while and just hasn't done much to it, maybe you can go in there and create value doing different things, thereby allowing you to raise the rents and increasing the NOI. So when you do go ahead and cap that out, cap rate, the stabilized cap rate might be 8-9%. Just depends on the deal. So I continued to work with him, and he did exactly that. He was blown away. He was making offers all over the place, getting lots of deals. He finally got one tied up in North Miami. It was a 28-unit deal, and the guy was a retired fireman. He owned it for 15 years. He didn't want the thing empty, so he always kept the rents low. He never raised them, never fixed the property. So Richard went in and he bought this thing for about 3.2 or 3.3, if I remember correctly. And went in there and did a lot of renovations to the exterior and the interiors, and got rid of most of the tenants, maybe 80% of the tenants. He raised the rents anywhere from $300 to $400 per month. And he took that property to a stabilized cap rate about 9%. His RRR is about almost late 20s, 28, 29%, if I remember. He's owned that property for about a year and a half, maybe almost 2 years now. And that property's worth over $5 million just by his value add. He saw the value in that property that others didn't see. There weren't many buyers sniffing around that property because they saw the 4.5 cap rate and they said, I'm not touching that thing. It's not a good deal. Wrong. It was a good deal. So the key is, just let me hit the footnote here. The key is to understand and see value. And to see that value, you got to know rents. Most of the new syndicators are on the computers doing different surveys, trying to find out what rents are. You got to get out in the marketplace. You got to knock on doors. You got to go pretend you're a tenant, see what the marketplace is really charging, find out the rents. So when you come across a deal, you're looking at it and you know that those rents are low. When you ask yourself, if you're just getting this business, you look at these properties, you don't know if those rents are low. You may have a broker sheet that says they're low, but they lie all the time, right? So you can't go by. You got to really know the rents. If you really know the rents in the marketplace, when you see that deal, and if it's priced at a low cap rate of 4.5%, you can look at it and say, wait a second, there's a huge opportunity on this property. Let me go out and take a look at it and see if there's other things I could do to really raise the rents. So the core is, you got to see value. You got to know income. You got to get out in the marketplace and really kick some tires and find out what the rents are.
Craig, I really like what you mentioned here shortly ago, which was regarding the cap rates. And this is something that I've bounced back and forth with guys, and one of the primary things that they look at when they're evaluating properties is they're looking at the cap rates, and I tell them you have to look for the opportunity, the value that you said. And it's the same thing whenever, I'm reaching out to brokers or they're calling me and they're asking me, if I'm looking for a certain cap rate or whatnot. And I tell them, no, I'm not necessarily looking for a certain cap rate. I'm looking for opportunity in this property, in this market, and you can, cap rate is important because it does, affect, your pricing, but if you buy, for instance, if you buy a property for 4.5, 5 cap, right? And most will argue that's a pretty low cap rate, right? Depending on the market you're in. So, but after year one, if you could go in there and increase the value and improve operations, and now after year one, you're actually at a 6 cap or a 6.5 cap, was that a good buy? I would say yes. That was definitely a good buy. Going from a 4.5 to 5, or 5 to 6, 6.5. So really, what you have to look at is, after year one, see where you're at after year two, and kind of, analyze it like that way. And the days of you finding deals, I'm not going to say that they're gone, but days of you finding deals that were like 8, 9, 10, higher cap rates. Again, depending on the market, there are very few and far between deals like that. So now you have to, pretty much come around to the reality, and the reality is that these cap rates are lower, and so you have to dig deeper to find those values in within those properties and within those markets.
And the key is knowing the rents. You got to know the rents. You got to know what real rents are, not these posted rents on the internet, because they're always wrong. I had all my properties, and there's all these sources out there, and I would look at the rents that they had posted on those sites, and they were wrong. They weren't even close. So you can't use that. You got to go out and kick tires in your marketplace. That's why I stay local, right? Because you need to understand your marketplace.
There you go. Stay local. So what if there's guys, for those of the guys out there that are not looking local, because they're like in a San Francisco or, LA or, New York. So those guys, it's not ideal for them to invest in their own backyard. So they would be looking, in a different location. So how can those guys find those same type of opportunities?
Great point. I got a lady I'm working with. Her name's Lena. She's from China. She's up in Seattle. Seattle marketplace is just so tight. I mean, the vacancy rate's like 2%. Unemployment rate's somewhere close to that. All the new construction that's being built is Class A, located kind of urban area. So what it's doing is the affordability is stupid there, right? So it's pushed everybody out into the periphery of that marketplace. So we're coming up with a strategy to set up shop right in the periphery where she can buy these things affordably and put affordable housing in and get higher rents because of what she's doing. And she's got a huge market to do that. So I recommend that for you that are in those marketplaces and you have to go somewhere else, look at your marketplace and see if you can go out on the periphery where people are starting to move. That's where the trends are going. That's where the demand's going, because that's where the affordability is, right? So I would focus on those areas. You got to know your marketplace. Anytime you go, let's say you go to a whole different state, right? Let's say you're in California and some guru says you got to be in Texas or you got to be in Alabama or whatever it is. So you said, okay, I'm going to go to the Alabama, right? I'm going to get on a plane. I'm going to spend 4 hours getting there, whatever it takes. And you get out there and you start looking around. It's a jungle, man. I'm telling you, there's so many problems waiting for you right there that you don't even know about because you don't know the marketplace. You got to learn the marketplace. You got to spend time learning the marketplace. So I'd recommend spending time learning the marketplace. I think that's real important. You got to get to know the brokers. You got to get to know the managers, the lenders. You got to build those relationships. You got to get them bringing you deals. You got to get them. All these brokers create these reports every quarter, like you see Markets and Untitled Chapter. They create this information. They tell you what's going on in the marketplace. You need to absorb that information. They'll give that stuff to you for free. Sometimes they pay a lot of money for that information, and you get it for free if you're one of their clients. So absorb yourself in that marketplace and really learn not just the market. You got to learn the players. Who's in the marketplace and who's doing what? What types of strategies are they doing? What are better locations? Because sometimes you have investor strategy that's not going to work in a really stagnant marketplace. Like there's nothing going on because a lot of guys want to start in B and C properties. You got to be careful in this marketplace. There's certain strategies that work in that marketplace, but you got to know the marketplace. You got to know what's going on. So I recommend doing that. Ultimately, if you got to do it, go do it. It's risky. It's just like you think about when you're out there trying to find deals. What's the one thing you're looking for in your marketplace? You're trying to find out-of-state property owners, right? Why is that? Flip it upside down. It's because they're so far away. It's hard to manage the property, and they're usually mismanaged. Not usually, but many times they're mismanaged. That's why you look for out-of-state property owners. If you go out of state, now people are going to be calling you because now you're an out-of-state owner.
Yeah.
So be careful on the out-of-state stuff. I'd stay local if you can. I know I mean, up in New York, it's just stupid up there. There's no way you can buy properties in New York unless you've been doing it for years. You got to go out. If you can go somewhere within a three-hour drive, but max, I would say, plus or minus a little bit. But the key is, if you, let's say you got a deal in Alabama, right? It's risky. You found some deal and you think the number is going to work. Now you're going to raise your money. You go, hey, Mr. Investor, I found a great deal. Oh, it's way out in Alabama, right? This investor wants to go kick the tires and see what's going on before he gives you his money. And he's not flying out there. But if he can get in a car and he can drive maybe 3 hours or less, he's probably going to do it. Another reason to go local.
Okay. So you're saying if not directly local, but within a few, 2-3 hours.
Yep. And that could be different state for different people. It depends on that, if you're in the East somewhere, that 3 hours could be 3 states.
Yeah, definitely. So stay within driving distance is kind of what it sums up to be. Okay.
Yep.
That's good. So Craig, we talked about, finding deals, raising capital. We briefly talked about that as well. So I want to go back to the value, so that's one thing that you hone in on is your value hound. And so you look for value. So one of the things I want to talk about is the different ways that we can increase value on a property. Right. And so this, again, this is, we speak about multifamily more on the show, but this can be across the board, on any other asset class as well. So what are some key value add strategies that are not necessarily common, that most people don't look at, that we can use or that we can implement into a property?
Well, I think one of the big ones, and we've been talking about multifamily, so I'll kind of keep it down this in this lane. But I think one of the big ones that most people miss, most of the professional guys that are doing 200 and 300 deals, they get this right. But most of the smaller guys that are under 150 units miss this opportunity. And that opportunity is what I call unit type pricing. Unit type pricing. And so what does that mean, Craig? Well, unit type pricing is a way to price each unit differently based on location, view, what floor you're on, upgrades, all that kind of good stuff. And I learned this from when I was doing retail space way back in the 80s. When you do retail space, they have the shopping center laid out, and it's laid out with some locations having better visibility and some not so good. So which ones do you think had the better pricing? The ones that had the greatest exposure, right? Mm-hmm. They got the highest prices, but the ones that are tucked back in the corners, didn't have much exposure, had the lowest pricing. So why not do that with apartment buildings? The same thing with apartment buildings. I mean, you're going to have a property, maybe a beautiful view of a mountain. Well, they should be paying more, right? There's a premium for that. So you have a $30 or $40 premium for that. And so what you're going to do is you're going to take each floor plan, all the ones and twos and threes or whatever you got, and you're going to break them down, and you're going to walk each unit, and you're going to figure out all the things that you have pluses for. You might have a plus $30 for view. You might have a plus $30 for being on the first floor. You might have a plus $10 for having a pool view. You might have a plus $20 for having upgraded appliance or whatever it is. You're going to price every unit separately. So when you do that, your income is really going to grow because now you're actually charging rents based on value, right? It comes down to value. You're going to charge rents based on value. And that's a huge one that most people miss. So I recommend you guys look at that. Obviously, RUB's a big one that a lot of small guys are not doing. That's the utility bill-back system. I think you've talked about that one, right?
Mm-hmm. Yeah, we have definitely talked about that, but I really like the unit type pricing. Another simple one, to add to that is like a pool view. You mentioned having like a mountain view or a lake view, but like even a pool view, if it's a really nice, like a resort type of pool, even if it's a regular pool, but if it's something that's really attractive to the tenants, then why not charge, something a little bit extra. Right. So, right. Those are definitely good things or maybe even charging something that's, something a little bit higher that, if you have like 1 or 2 laundry facilities on a larger property and you're like right next to the laundry facility, then that could be worth, a few extra bucks as well, because it's convenient.
Right on, Juan. That's great. Yeah, that's a great one right there. Yeah, you got to look at the value that you're offering for that particular unit, and you price it accordingly. Another big one that a lot of people don't do is interior upgrades, right? So just little small things like you're gonna, hey, we'll take a wall and we'll cut it in a different color, or maybe we'll put up a black backsplash for you, or things like that. We'll put something on the wall, a shelf or something like that, and they can pay extra for that. You'll have it set up like that. So that's something you can think about. A lot of people doing, but probably one of the biggest things that people are not doing. I mean, I'm afraid to say this, that most people are not charging the other types of income you can charge. Like if you have a pet, you're going to pay a non-refundable security deposit and you're going to pay pet rent, right? A lot of people are not doing that. A lot of people are not charging month-to-month fees, right? So if you have a lease agreement and that lease agreement is going to expire and they just want to go month-to-month, well, there's a charge for that. Most companies will charge. They're going to bring the rent up to market plus a month-to-month fee, right? To get them to sign a lease. If they don't, a lot of people will pay that. So it's next income source. But just charging the basic stuff like an admin fee. A lot of people don't do that. You got to do that. You got to model that into your deals.
Yeah, and those are some good points that you brought up. And again, it's about finding those opportunities, and those little things come out to be big things. Once you divide it by the cap rate, then it increases your value a lot. So, just going up $5-10, across a 100 unit property, that's a lot of value.
That's value.
And,
yeah.
Yeah. So that's exactly what you want to do, and try to find those opportunities that nobody else is looking at or is overseeing. So, yeah, I appreciate you sharing those.
Let me add one more thing. Just one more thing.
Yeah, go ahead.
A lot of people don't do either. And this is a big thing. They don't manage their lease expirations, right? Lease expirations are critical, especially as you start to get bigger properties. Because if you have a property that's located in Minnesota, what's the best time to lease units? In the summer, right? You're not going to lease many units in the wintertime. So what you need to have is a lot of your leases expiring in the summer, not in the winter. So if you're having a lot of leases expire that's in the winter, you could expose to a lot of vacancy, and then you're not going to fill it back up. And a lot of people do that. So that's actually an income generator. Just making sure you manage your lease expiration. If you're in Phoenix, man, if it's 115 here in the summertime, you're not doing many leases. I'm here to tell you, you're not doing many leases. So you got to make sure there's not many lease expirations in that month. So you got to manage those leases. Sometimes you're going to do an 8-month lease. You might do an 11-month lease to manage those lease expirations. So you have more of them expiring in the high rental period versus more of them expiring in the slow rental period. So that's a big value.
Great tip right there. And now that we're talking about the leases, even charging a little bit more on a month-to-month, if you do have some of those units, charge them the extra fee, because they are on a month-to-month versus maybe a year or a 1-year lease. But just try to take advantage of every single opportunity that you can. And that's, whether you're managing the property yourself or you have a third-party property management company overseeing your operation, you both have to be aware of that. So those are great points. So, and Craig, I would say also is, one thing that you like to also speak on is, and you did talk about this earlier, but I will add to it here again, is to stay focused on what it is you're doing. And you have this little saying that says, if you're chasing rabbits, you're chasing multiple rabbits, you're not going to catch one. I don't know how you say it exactly, but it's a good point to bring up that, chase one rabbit, and you will eventually catch it. If you're chasing multiple, you're not going to catch any. That's kind of the way it sums up to be. So I really like that you emphasize that a lot.
It's one of my core beliefs. I got a few core beliefs, but being focused is everything, right? You got to focus on one rabbit. You can't be out chasing rabbits all over the place. A lot of people run around trying to find deals and trying to see if they can make them pencil. They don't know the rabbit they're going after. They don't know the type of fish we talked about earlier, what they're going after. You got to know that. I had a guy that's actually out in Texas. He was buying deals between Dallas and Houston, right? And we put together his whole plan. He's ready to go. He's doing senior housing. He had a great story. We created a great story for him. And he's out there and he's starting to buy properties. Things got a little bit slow. So he calls me and he said, "Hey, I found this deal. A broker brought it to me. It's a nice self-storage deal and it's going to generate a great return. Would you invest in that? And I said, what do you know about self-storage? You're just chasing a rabbit. That's not your expertise. Your expertise is senior housing for multifamily. So I got him to say no to that deal. But sometimes it's hard to say no. You got to stay focused. But opportunities are going to come up, and it's hard to say no. You got to say no. If it's not down your lane, it's in another lane. You got to say no.
Exactly. And I say that a lot, and you are 100% on. If it's not something that you're comfortable with, and it's not something that you have been doing research on, and you haven't been doing it for the last couple of years or longer, then that's something that you really, really have to think about because it becomes riskier. You're playing in somebody else's territory there, and that's not something that you really wanted to get into. So, okay, Craig, you have definitely given us a lot of value, and so I guess it's time for our nuggets of wealth. These are questions that I ask every guest every week, and hopefully the audience can pick up some good tips from this. So, Craig, what is a good tool, source, or platform that you use almost every day that can also help others?
Well, let's see if I can give up some nuggets here. I will say one of the big things I've used for years is I've always wanted to see the bigger picture of what's going on. I mean, if you look at the bigger picture, real estate is one little small piece of the bigger picture. It's just one color. There's all other kinds of colors. So I want to understand the bigger international marketplace. What's going on in other economies? What's going on locally? What are interest rates? How is capital affected by interest rates, and what's going to go on in the deal market? What's the stock market doing? What are oil prices doing? I want to see the bigger picture because it helps me make better decisions on my little piece, which is real estate. So I always follow what's called marketwatch.com, right? You can check that out, marketwatch.com, because it's a great business online service. It's very extensive. It's got lots of articles, interviews, everything, and it has all those stats on it. It has those stock market quotes. It's got rate quotes. It's got everything. So I follow that a lot. Another thing I recommend for you guys that are just getting into multifamily is there's 3 publications that you need to sign up for. And it's all about multifamily. So the big one is Multifamily Executive, and that's geared more towards strategic type stuff and portfolios and bigger type stuff. And they usually have a once a year conference in Las Vegas, sometime around September, if I remember, September, October. A great place to go and meet people and learn the business. Another one is Multifamily News, and that's more a bigger picture about different companies doing different things. New strategies that people are using. It's really a news based, and you get to learn what some of the players are doing in that marketplace. I recommend that one too. And the last one would be a Multifamily Insider, and they focus more on the leasing side and a little bit on the management. But it's all about how do you keep your properties full? What are some of the new technologies being used at the properties to help leasing? What are some of the types of tenants that are really growing, and what are they looking for? So I would recommend those getting subscriptions. All you got to do is go on there, log on there. Most of these subscriptions are free, and they'll send it to you usually once a month. So that would be my golden nugget.
Yeah, no, that was more than one golden nugget there. So that's awesome. And then if they're free, then that's even it's icing on the cake at that. So yeah, I love it. Craig, what was the best business advice you ever received?
Well, I think. We just talked about focus. Focus is number one. Mm-hmm. And the next thing would be building relationships. I don't care if you're a broker, you got to build relationships. You're a property manager, but any business you're in or anything you're doing, you got to have relationships. This is how you build your business, right? So you got to have relationships. Well, I think I told you back in the 80s, one of my clients was a syndicator, and this syndicator his name was Sherman Mazer. He worked for Tadco Investment. He started this thing. This guy was an expert at raising money. He had so many relationships. He had 4, back then we had things called Rolodexes, right? He had 4 Rolodexes packed. He knew everybody. So he raised billions and millions of dollars. He grew his portfolio to over $2 billion around the country. So I think building relationships is so important. Once you get to know people, you'll start to be able to connect people with other people that need certain resources, and you become the expert. You're the guy that's putting everybody together, and now you really got their attention when it's time to raise money. So if you guys are going to go raise money, start building relationships now. It's going to be a lifelong thing.
Mm-hmm.
So start building them now. So I would say that's a big one for anybody.
Yeah, that very, very good point. Very good point. Because relationships is part of the business. Whether you like it or not, that's the way it is. And we have to make sure that we focus on those. So, Craig, what book are you currently reading?
Well, I'm reading a book right now that I really study fear a lot. So there's a book out there called Feel the Fear and Do It Anyways. It's by Susan Jeffers. And, if you think about it, when we started to learn to ride a bike, right? We were scared, but we did it anyways. You get a new job. You're a little bit scared about how things are going to work out, but you did it anyways. Right? Fear is a big part of life. Anytime you're going to grow and get better at something, you're going to have fear. All the top entrepreneurs, the Bill Gates, Warren Buffett's, Steve Jobs, all these guys, they always have fear. They're no different than you. They have the same fear, but they do it anyways. Mm-hmm. So I would recommend this book. It's a great book for everybody because everybody's got fear. There's nobody that doesn't have fear at any time. It's how do you manage that? You need to get that fear. You need to look in the mirror and say, I love fear. You need to really embrace it. And because what fear is, what it means is, think about when you're really scared sometime. Man, you're so focused. You got all your energy going. You're at your top of your game when you have a little bit of fear. That's the best position to be in. Too many people are not living their life. They're stuck in fear instead of looking at it as an opportunity to grow and become better. Life's a game. Let's have fun with it. Who cares about fear? We're going to get better because of that. So I think that'd be a great book for people to read.
Yeah, exactly. And, part of fear is not taking action at times. Yep. And so, what I always like to tell people is, time is going to pass by anyway. So why not take action? Why not just punch fear in the face and just take action anyway? Because you look back on it, the time is going to pass no matter what. Time doesn't wait on anybody. So, I really like that. Feel the fear and do it anyways. You said it's Susan who? Who was the last name?
Jeffers.
Susan Jeffers.
Jeffers.
Okay, got it. And you have a book. You have a book as well, right? It's called Eaglepreneur Breakout?
Well, I got a lot of books that I've written more towards real estate, but this is still kind of geared towards that, but it has a bigger audience. And it's called Eaglepreneur Breakout. It's about how to transform from an underachiever into a high achiever, how to get stuff done, right? I did the survey of my clients, and I talked to other coaches, and there was a big study that came out from Scranton back last year, I think it was, or a year before that. They found that 92% of the people that make New Year's resolutions never get them done. They just don't. 8% of the people are the only ones getting stuff done. And I found that happen a lot to people. So people aren't getting stuff done. So I wrote a book that aims right at that. And part of that book is the 8 steps we went through in a lot more detail. The book is about, really how to get stuff done. And let's make it so it's easy to do. So when I have fun through the process. So I kind of pull out, if you go bowling, you got these little bumper guards that can come up. So when you roll the ball and hit the bumper guards and still make it down there. So this thing is, my system set up so that you can hit these bumper guards and still keep going, right? And as you get better and you get more confidence, the bumper guards are going to come down and you'll start to grow even more. So that's a book I have coming out here probably next month.
Sweet. Okay. It's called Eaglepreneur Breakout. Okay. Yep. And it'll be available on Amazon?
Yep. Amazon. Yep.
Sweet. Okay. Well then, yeah, we're pretty much done, Craig. So, where can Commit to Wealth Nation go to contact you and find out more about you and, the Value Hand Academy and, all your stuff that you're doing?
Yeah, I think the best place to go, quite honestly, guys, everybody's listening to this thing. I think even if you're new or experienced, I've got a lot of information on there. It's called the valuehoundacademy.com. This thing has been around for close to 10 years now. I've got like over 600 pages. Everything's free. I've got interviews of some of the top guys who are doing have billion-dollar portfolios. I've got some of the guys just getting started. I got interviews on them. I've got tons of articles on how to manage properties, how to buy properties, how to syndicate properties, how to raise the money. everything you can think about the syndication business, there's information there, whether it's a video, it's an interview, it's an article, whatever. It's all free. Dig into that. There's way too much information for you. You'll be in that for a long time. But we've just started a new Facebook group. Probably it's been 2 or 3 weeks now, and it's all about communicating, getting together with people, and talking about some of the problems you're having and helping you with them. So it's called the Syndicate Group. The Syndicate Group. It's a Facebook group. So check that out. It's free to join, and you'll find a lot of helpful ideas. You know, we just talked about some of the value add items. I proposed a question to everybody. What are some of the value add strategies that you're using? And we got a nice long list that we posted up there that people are going to use. So this is really a helpful place for you to go. So I recommend you taking your time going there. If you need to get a hold of me, my email address is craig@valuehoundacademy.com. That's craig@valuehoundacademy.com. And you got any questions, concerns, send me an email. I'm here to help.
Okay. So craig@valuehound.academy.com. Okay. Yep. Well then, Craig, man, it was a true honor to have you on. Man, you gave us a ton of information. Hopefully you guys, you can listen to this podcast, listen to it again, share it, with others. It really is a powerful podcast, here with Craig. And so, Craig has over 35 years of experience. He definitely knows what he's talking about. So, definitely, like I said, take this information in. And so, Craig, thank you once again. I appreciate having you here on, and I wish you continued success in your future.
Thank you so much, Juan. I'm glad I could serve your audience, and so best of luck to you.
Yes, sir. Thank you so much.
Take care.